Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We got CPI coming here. Not too much moving overnight. I'll go over here real quick. We got the news in about 3 minutes. Treasuries a little bit higher. Equities a little bit higher. Or sorry, not that. That's not equities. That's a 5-year. But it's equities a little bit higher. Oil kind of middling. Gold and silver. Silver actually taking a little bit of a dip there. Copper maybe trying to get some mojo back. And we are seeing some movement in the dollar. The dollar down below 103, and Bitcoin kind of middling here. So the general consensus, the street expectation here is that the number will be a little hot. Hey Pep, welcome back. Glad to see you here again. All right, so for the numbers here, we are expecting U.S. core CPI month over month spot 4% versus a previous reading of spot 3. Again, the market appears positioned for a slightly higher than expected number. So we're just gonna wait here. I'm not gonna hype it or anything. Let's just wait for the news. You know, this is going to be interesting because the kind of some of the volatility and so forth is pricing that this move won't be as extreme as the past CPIs, but the market is completely pulling and so forth. So yeah, we could see some crazy things. Meanwhile, here on the swing trade, do we keep it? I think we keep it. So I'm going to keep my hand off the mouse here. I'm going to be tempted to click something. Yeah, they're buying the treasuries going into this number here. Okay, somebody smack it back down. Here we go. Ooh. Ooh, mama. Oh, okay. So this could get really volatile. All right, so US core CPI month over month spot 4 versus an expected spot 4, and the US CPI month over month spot 5 versus an expected spot 5. So things are generally in line. How is it that we got year over years at 6.4? Interesting. But Lucas says boring and uneventful. The numbers are not all of that special, and this looks like a knee-jerk reaction. And I'm a little bit surprised. I would have thought that in line would have been a buy. Does that mean that we buy it here? I'm kind of thinking maybe you do. But first we let it chill out a little bit. That reaction does not quite make sense. Oh, there's revisions. Okay. Those were your hotkeys? Oh, gee. Oh, geez, Lucas. Let's come in here. The Consumer Price Index for all urban consumers rose 0.5% in January on a seasonally adjusted basis after increasing 0.1% in December. The U.S. Bureau of Labor Statistics reported today over the past 12 months, the All Items Index increased 6.4% before seasonal adjustment. The index for shelter was by far the largest contributor to the monthly All Items increase, accounting for nearly half of the monthly All Items increase, with the indexes for food, gasoline, and natural gas also contributing. The Food Index increased 0.5% over the month, with food at home index rising 0.4%. Energy increased 2%. Okay, so that's interesting. Okay, so food still persistently high, not very good, but home prices, apparently shelter, 0.7. So that's actually less than last month, but yeah, it looks like it is reversing here, folks. I think that's my exit on this thing right here, flat. Now these micro futures are not like doing anything, and I don't know. Oh, somebody did hit. Okay. Too late now. You there, Akshay? Could use your data here. How long before it calms down? Well, I usually wait at least 5 minutes. 5 to 15 minutes. I should have hit it. I looked at it and I said, that doesn't make any sense. And then I started seeing the orders come in. Oh, well, it might have been delayed data, but so now I don't know if 3.637 is sensical or not. It's close enough that I can't tell. I don't know. There's some pretty wild, like when I exited that swing trade, there was some pretty wild volume going on there, right? So one of the things that you can see sometimes is that those swings from the volatility become so big that it's hard for them to ever match them again. And that tail on the upside in Xian is really, really high. Because yeah, that they reflexively sold off is a little weird to me. Now on equities, I'm particularly nervous because, I mean, equities are already relatively high, right? Hmm. Tough one. Somebody must have been like really puking a position up there, because like look at that volume. That's a little insane, right? Seems like here in this location that there's some fight though. Okay. My news squawk just noting that the Fed swaps are showing not much change at the moment. Maybe they were trying. It doesn't work like that. You can't spend 15,000 contracts just to shake people up and then expect to make money off of that, right? And it wasn't like the offers just pulled or anything. Like there was real volume behind it. Whoa, okay. Okay. Sellers making quite the excursion there. Just hearing something from Wells Fargo saying spending data is healthy. Maybe that could be part of that downside movement that we just saw. I'm going to clear my DOM here. Well, I thought that I was getting a low risk location. Clearly, there is still a lot of insane volatility. So, could be there are some interesting things here about this 27.5 area. What is your financial? So I'm not giving you commodities trading advice, but my initial read of the numbers is that in line with the expectations is really good. But because there's so much positioning and so forth built around this, you could get some really difficult trade here. So, for instance, this excursion to the downside, a little bit unexpected to me. And one of the things that I see here is that the market, well, actually, I don't know. The market was expecting this number to be a little bit high, and it wasn't, right? So that might explain in part that insane spike that we saw. But what I'm seeing at the moment actually is the dollar seems to be dominant again. And at the moment, the dollar is rising. So, you know, that could result in some, you know, basically, I'm not getting the action that I was expecting here in the treasuries because of that dollar. Right. So, either way, I think that the appropriate thing to do in this situation is to be relatively conservative with your risk, like you know, don't add contracts, that sort of a thing. Okay, Nick Timmerhouse has been tweeting about the numbers, although he hasn't really left any commentary about it yet. In fact, I haven't seen a whole lot of commentary overall. As a reminder, CPI revisions hit Friday, rewinding the last 12 months higher by an average of around 0.1%. So while the trend going into today's much anticipated CPI is the Fed's friend, we are further away from the target before we see today's print. Oh, no, wait, that was... Dun, 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 dun. The rise in Americans' cost of living outpaced their income gains for the 22nd month in a row. And that's about all of the commentary that we get about it from Zero Hedge. Again, a little bit of an excursion here in the treasuries below the opening. The pit session open kind of resulted in a little bit more stronger selling. The cumulative deltas that I'm seeing, at least in the 10-year, are not too strong. But there was some pretty strong deltas over in the 5-year and maybe even in the 30-year, I would say. So we are still in a world of correlations. Is what I have to make of that. I'm going to start messing around with some contracts over here in the full. At the moment, I think I should be focusing on just trying to stay calm because there is a lot of randomness in the market right now. See, 3.7 was the place where I was like, oh, are they going to hit it? And then, you know, we saw some of that selling eventually come in and push us down. So that's kind of curious. Yeah, I'm definitely nervous. So far, this doesn't appear to be going the way that I thought it would. So we've either got a really great trade for positioning, or like I'm like really dead wrong here about what this is going to do. And because I think overall this should be, you know, should make rates lower. You shouldn't be. No, the idea that like you can somehow eliminate your emotions from the equation and eventually it just doesn't get you anymore, as I don't think an accurate assessment of how it works. I'm gonna cancel that one. I think that what happens is you just get better at being able to feel your emotions, process them to your benefit, and not have it negatively affect your decision making. But I think that in a move like this, and if it goes a little bit against you, you're always going to feel a little nervous. And if you don't feel nervous, you might be fooling yourself. Or not aware. That's the worst, is when you're nervous and you don't realize it. Which can happen. Okay. Well, so the dollar turned back down. The SPOOs are like right at 41.50. So I would say higher from here, although in the S&P, I don't think that I could confidently take a trade and say we'll touch 41,200 before we'll touch 4,100, right? Maybe we touch 4180 before we touch that, but not. Wait until 7:30. Well, I don't think you have to wait that long. So the first thing is that around 7:10, 7:15, you're likely to start seeing another set of moves, right? Right now, though, when we're in kind of like what I would call like the ricochet zone, which is within the range of the initial swing high and low from after the news, right? So within this location, it seems that the correlations and the movements and positioning across the currencies is the most dominant factor right now. Once you get into 7:15, well, like 7:15 my time, so 9 o'clock Eastern time, that's when you're gonna find the equity flows start to become a little bit more dominant, right? Does that mean that we'll start seeing more buying in the S&P 500? Maybe. I mean, if it was based just purely off of the numbers compared to expectations and everything, I think that you will see that buying. But again, it's a lot more complicated than that. And the action that we're seeing so far suggests to me that that picture is a little bit more complicated than I have the ability to analyze at the moment. But buyers making some headway. They're back above the open. It's not a fast sweep across it like it was on the downside, but they are making some progress. And it does appear that there's not a whole lot of resting liquidity up there left, or have built up yet to really hold them back too much. So still volatile. By the way, a note I mentioned that 27.5 area looked interesting because that was like seller average positioning. So they came back to the seller average positioning and kind of arranged around there and kind of allowed them to readjust their positions before turning back up here. So I would say, even though that area doesn't give us direction, it did end up being a key area. Watch. So now my issue is, I don't, when you get like really scared and then it starts going your way, I'm going to get a little bit euphoric. I'm going to start yapping a lot. You're going to start asking me questions. We need to stay vigilant at the moment, okay? Okay, so there was a little bit of a top sort of thing there. Which is to say they pulled back from that high at 05 more than they had been. So possible pivot. The dollar did turn there. and see the dollar turning back up. It is definitely the dollar driving this, man. See, like, so the issue you got here is like risk on is usually the dollar down, right? So the more the dollar is down, and you can see it, this correlation playing through right now. The more the dollar is down, the better it seems to be for the treasuries and the equities here, right? But less inflation than expected is also kind of dollar positive to some extent too, right? So the dollar is kind of fighting here between which direction it goes. And right now, the other instruments don't seem to be trading against the volume in themselves. They're trading mostly the correlation with the dollar. So which way rather, does the dollar actually decide to go? That makes it a more difficult trade, right? Because if I have to outright trade the dollar here, just from that explanation that I gave you there, you can tell I'm not 100% sure which way the dollar resolves, right? Well, I'm not seeing the volume in the 10-year come back. I am to some extent in the 5-year. But they gave up that spot all the way back down to, let's say, 28.5. Where these big orders at 28 are, they gave that up really easily. So this liquidity in this whole area is just like non-existent. Probucks on Discord says we're going nowhere fast. I would agree with that. There is that maybe makes that. I mean, once they started to get towards that liquidity, things kind of shifted again, right? But have a cigar? No, that's a terrible. Smoking definitely relaxes you, but then what it ends up doing is it makes your baseline, levels like way more stressed out. It's a way better to not utilize those things and just learn to feel it, man. Okay. Oh, are we getting another number here? What is it? Oh, the red book. Gotcha. So, I don't think actually, where is it? Okay. 25.5. Okay, so there was some at 25.5 that pulled, but there was also a lot that got executed here. So at the moment, this area so far has been a little bit of absorption and has been holding it. Okay, and the dollar possibly turning here again. Another thing I should note is that when I come over here and I look at the Japanese yen, the picture in the Japanese yen looks really confused. All those old pit documentaries show traders smoking. Well, that was because back then it was like a really prestigious thing, right? You remember the whole cigar thing in Seinfeld? Like, it was really hard to get a hand of like a real Cuban cigar. That meant that you had connections and that you had money and so forth. I guess it still means that, really. I tell you what, like if I'm at a rave, okay, like sometimes I'll feel nervous before getting on stage for DJing at a rave. I've had that a couple of times and this is where I'm saying that like you can be nervous and not realize it. So like I'll be kind of jittery and like shaking and so forth, but in my head I'm just being quiet, you know? And people are always smoking backstage at raves, especially if outdoor rave, right? And all it takes is one whiff of secondhand, you know, all I have to do is smell it and like it immediately calms me down. So I think my body is overly responsive to nicotine. Even I've never smoked, but seems to me that if I ever started smoking that it would be incredibly difficult for me to stop. Well, getting easily addicted to substance abuse is an ADHD thing. So you're never going to catch me even playing with that stuff. To be honest, I avoid caffeine too. I think that kind of started because in the LDS community, there was this period. Okay, I'm going to teach you a little bit of Mormon history that's kind of interesting, all right? The LDS church has this thing called the Word of Wisdom, right? Where you don't drink alcohol, smoke, marijuana, other harmful drugs. And it was not always that way. So in the early days of the church, they still drank, for instance. And like the Word of Wisdom was kind of more of like a suggestion or a guidelines. But then what happened was the women's rights movement and prohibition, and the church very strongly aligned itself with prohibition. And so that was when they shifted to you absolutely have to follow the Word of Wisdom, right? So especially in the early 1900s, there was a lot of comments from church leaders and so forth. I am an LDS person, so I know all this stuff. There was a lot of comments from early church leaders in the 1900s talking about how awful these substances were. And it was so extreme, the things that they would say, that it was like that they were saying that you shouldn't even drink hot chocolate or soup, right? Like that was how far some people took it, right? So caffeine has kind of always been this like a gray zone for LDS people, where it's like there's been a lot of leaders that have said that you shouldn't drink caffeine, but like everybody in Utah does it, sort of a thing, right? Here are things that are good and bad about caffeine. So when I was young, I would hear those things and I was just like never interested in caffeine. But as I've gotten older, I just avoid it in general because, number one, I don't like the way that it makes me feel, because it kind of makes me feel comatose and like bored, and it doesn't help me. Like it keeps you awake, but it doesn't really help me like focus or anything like that. So I avoid caffeine. There is a lot of fight here. Oh, sorry. Yeah, I said LDS. We're talking about Mormons, right? So yeah, I avoid caffeine even. And when I look at my dad, because I'm pretty sure that I got my ADHD from my dad, and he's just never been diagnosed. I'm like, oh, you should go and get medication. You'd be like, that would solve so many of your problems. And he just doesn't want to do it. So what does he do instead? He self-medicates by drinking tons of caffeine. So like, I know that if I got into the caffeine, that I would probably become like addicted to it, right? But I also know that like it's not really good for like my ability to perform. The caffeine doesn't help me, so I avoid it. So yeah, I'm like overly sensitive about stuff because it just terrifies me, the idea of substance, being addicted to substance. Like, even as something as innocuous as being addicted to caffeine kind of scares me. Yeah, if it doesn't help with focus, there's not really any point. Well, and that's the whole thing is I think that a lot of people think that caffeine helps with their focus, and it really doesn't. Caffeine will help you with reaction times, and it will help you stay alert, but it doesn't actually help you with focus. What type of medication to be ADHD? Well, there's lots of different types of medications. There's antidepressant types of medications. There's stimulant types of medications. A lot of it is a placebo, maybe. Shouldn't drink it as soon as you wake up from bed, but an hour and a half, it's okay. Okay. Man, this is, so in this range here, let's say around 29, which is just slightly below the regular session start, and just slightly below where we were before the news for the most part. It seems to be really struggling, and it seems to be really fighting. And so the price action, at least, seems to be suggesting so far that this is just gonna to consolidate somewhere around 27, 28, and that there's no way we get to those highs again. But why is it doing that? Again, look at the dollar. Look at how closely correlated with the dollar it is. And when the dollar turns down, these turns up, and when the dollar turns up, these turn down. So this trade has turned into a dollar trade, which I hate it when that happens. I would much rather see a move with volume in my instrument, you know, instead of correlation. Okay, so that was a bunch of shuffling at 41 and 45 in the S&P 500. A bunch of clicking there. Maybe you didn't hear that. Well, it seems to me that the dollar is the leader here. And in my regular Treasury sim trade here, I've got the full clip on. Like, I've got max risk on at this place. Okay, so somebody really tried to stick a bid there at 26.5, but like, look, well, you got filled, bud, I guess. Anyways, so we may be seeing the equity traders waking up and starting to do stuff. I'm hearing event contracts on Bitcoin futures on March 15th. Interesting. Or we get, Mohammed A. El Arian, U.S. inflation was broadly in line with consensus forecasts, better than fear due to some recent high-frequency indicators. This is good news, less good. Every inflation measure is still too high and going up on a monthly basis. Steve Leishman, there just isn't a meaningful gap between the futures market and the Fed rate outlooks. Perhaps the Fed will have to do more, but for the moment, the two very much agree. Just 21 basis points separate them, which can be explained by the difference in what is being forecast. And that's pretty much the extent of the analysis that I've seen on Twitter, at least, post-release. Edward Snowden says UFO hysteria is engineered distraction from Nord Stream pipeline bombshell. Well, maybe. I do think that the Biden administration is kind of trying to distract people. But I think that they're maybe more trying to distract people from their failures with the initial balloon. The reason why I say that the Biden administration is probably trying to distract people is because they're making this big to-do about that the Trump administration didn't see it. Well, it's like, yeah, because you have a different radar technology now, and that's why you can see them. It's not Donald Trump's fault that the radar technology hadn't come out yet, is it? There is an offer there now, man. Well, that was a little bit more of an excursion on the upside. By the way, I find it really curious that they weren't able to fill my orders at 113 even. They came just short. Suspiciously short. Maybe some rebalancing. Are we seeing? Yeah, the dollar kind of shifted back down. Yeah, and so there was a really good, strong down bar in the dollar, and now look, it's right back up there. And so what I'm seeing now in the order flow in the treasuries is that the market makers seem to be just adjusting their bids and offers based on the dollar, and all the while you're getting tons of volume on both sides. But that does look like in the 10-year in particular that you're starting to see some longs puke. You don't think the background music is helping? Yeah, I don't think so. I think I have to puke this, guys. There's a big offer there in the 5-year. What's with that? Pulled, and now kind of some weird action, but they didn't cross through the price that the offer was at. Man. Oh, and as I'm not paying attention, the treasuries go further. That's, yeah. Well, we are getting some absorption here now. Yeah, the numbers are in line. Oh, fuck. Yeah, that, I mean, I put on a lot of risk because it was CPI, but that did not work out. I'm really mad about it. In fact, what was the best I ever got out of that? 8? I only ever got 8 ticks favorable. Are you kidding me? That was a bad trade, guys. Well, I think that number one, it seems like maybe the market disagrees with my conclusion of the numbers. But number two, it looks like that the price that I got was just not very good, right? But here is the time period where I said that, you know, maybe the equity traders would come in, and now everything's kind of turning back here. This is really bizarre to me. Well, not bizarre to me, but like, so some people in Discord are saying, oh, I think that this means that the central banks are going to be more aggressive here again. And I'm like, why would that, how could that be more hawkish than anticipated? With the numbers were in line. Well, there was the better exit that I was kind of hoping for. Oh, no, that's where I got out at. Never mind. 21. Ah, jeez, guys. Well, I don't know if there's anything to do about it now other than to just say I took a big risk and I was wrong. The dollar, so if we kind of zoom out here, like the dollar is definitely going higher here though, right? It looks like this one I should puke this as well, so. Yeah, I'm a little disappointed because I thought that was a really good shot, you know? Of course, I was a little bit concerned when the next impulse was the wrong way, but you know, I really held out that our flow was going to start coming our way, and it just never did. Now, the thing that comes interesting on this one is there continuation now? Because sometimes you get this sort of thing where it's like you could have gone short and, you know, it just keeps going and going and going and going. There's certainly the possibility, because I mean that those lows are like well within reach. But my mind is probably thinking about that because it wants revenge. Also, it kind of looks like we did get like an impulse short there 5 minutes ago. And so this area around here to around 20 might turn into a liquidity hole. And then at that point, you're probably going to have a much more stable liquidity. So let's reset things right there. Yeah. You know what? The other thing is that this movement, it wasn't just my take on it. Like, it came in line, and I looked at the numbers and everything, and I thought, oh, okay, this should be good for treasuries and equities. That was also the conclusion of all of the like kind of game plan preparations from the banks and so forth. So I think a lot of analysts got this wrong. I guess it's not over yet, but even if this like turns around, even if this turns around and like the S&P 500 goes to like highs and stuff by the end of this session, you got to wonder what it was that we got wrong about this. It wasn't free research. And I'm not so sure that I could say that it was inaccurate. Oh no, encoding overloaded. What's going on? We okay? I think it was just kind of a little temporary hitch. I wouldn't say that it was inaccurate. I think that the conclusion here that, well, maybe it is inaccurate. I don't know yet. Nah, I don't think we've heard from Uzi today. Nope. I mean, so the question is, what's driving the flow, right? So the thing that they might have gotten wrong is maybe CPI not being as good as high as feared is good for the dollar because less inflation. You know what I mean? And if the dollar is driving everything else, then that kind of makes all of their other analysis, you know, it wasn't that they were wrong. It was that they didn't focus in. They didn't catch the thing that would really ended up being important, right? That's different from inline numbers is actually really bad because that suggests that inflation is still a really big problem and that central banks are going to have to continue to be really aggressive. Because if you're just looking at the Treasury on its own, you could easily conclude that, right? Oh, the Treasuries are selling off, so that means they think that this is going to cause the Federal Reserve to be more aggressive, right? So do you see there again, the dollar turned a bit? Strong bid showing up in the 5-year. I don't know, guys. Been doing it long enough to understand that I suck at event trading. You know, in this one, I thought that I had waited long enough. I got more volatility and exertion on that than I thought I was going to. Well, there's a strong bid in the 5-year and somebody just took it out at 107.222. Okay, so Fed's Barkin is being interviewed on TV. Okay, so I just want to note that we appear to be getting some upside impulse in here, especially in the 5-year, but especially in the 30-year. But the spread has been a flattener, so you'd see more buying in the 30-year. We have to discount that a little bit, and we are likely at a liquidity hole at 20. So you can see news squawks on TweetDex Forex Live, noting that the dollar turned back higher. Also, probably one of the more significant moves here was like oil was kind of ranging around like everything else, and they dropped out of the bottom of that range hard. Everything else is kind of still within the range, but oil broke out of the range. Yeah, look at that. They came back up to the highs really easily. I would say, despite there's being some evidence of perhaps a liquidity hole at 20, the market volume is still really healthy. The wick on ZN is 100 times more than on NQ? Is it? I will say that when we were on the upside and we were getting like stop outs up there, that flow was wicked crazy. That was what kind of made me be like, okay, it's pulled back. I should probably try and take a trade here. And it, oh man, it just, I'm a little frustrated that it ended up being that bad of a trade, right? Well, one thing that I'll note about this event, it's been a little bit more choppy and indecisive than past news events have been, right? It's been so often the case in the past 6 months or so that like one of these news events comes out and it just goes one direction and it's like really easy trades. This one was one of the most difficult trades in months, I think. Well, I don't think that it had anything to do with the market makers. No. Could go from lows to highs. Well, right, but I don't see any evidence that it was the market makers causing that behavior. Maybe because of all of this 0 day to expiration. That could be. But again, what I'm seeing is that the biggest driver in the market right now is the dollar. So again, let's just go back from like square one. Okay, we got the market was expecting that the number was going to be hot. The number was in line with expectations. Okay, if you're trading the dollar, is that good or bad for the dollar? Okay. Well, if you think that that news was good for the market, good that it was in line, okay, one could argue that the dollar goes higher because lower inflation is good for the currency, right? On the other hand, you could also argue that it go higher on this argument that inflation is still kind of being stubborn and that central banks are likely to continue being aggressive, right? So you see what I mean? This is good for the economy and bad for the economy. You could explain the dollar going higher either way. On the other hand, you could also say the dollar should go lower because this is like a lot of risk being taken out of the market, and so that flight to safety to the dollar should dissipate. That could be the argument that it goes to the downside, right? So if I was a dollar trader, I don't think that I would have taken a trade after that. I would have said, I don't know what this is going to do now. I would just be sitting, right? Meanwhile, everything is watching the dollar. Every turn that we've had has been perfectly correlated across all assets, and the dollar appears to be leading from what I can see. Because I don't see, like, there are flows, of course. There was definitely flows when they sold it down in here, right? But I'm not seeing super strong flows in the treasuries. And I'm not seeing like excessive pulling or anything like that. I mean, there's like healthy volume across the prices and everything else like that. And so it seems to me that the market makers are just adjusting their bids and offers based on the synthetic dollar. So I don't think that you can blame it on the market makers over here. That's just the market makers will make money by doing nothing. They don't have to do anything tricky or anything like that, right? They just have to follow their correlations correctly, right? So the one that's being tricky is the dollar. And the issue is that we see, so the looks like that the dollar may break out of its high from after the news. So if we do say that it breaks out of the high, which is the reason why, because we explained like a couple of different reasons that are seemingly contradictory as to why perhaps the dollar moved the way that it did, right? So that's why it ended up being a shitty trade. Right? It's a situation where because of the correlations and what we're correlated with and everything, the correlation makes us less certain about what's going on, not more. So normally you would be able to, you'd be able to look at all the correlations and say, okay, the market very clearly believes that inflation is still a problem, right? At the moment, though, the flow is starting to look a little heavy in the Treasury. Why is Marco Rubio quoting the Bible again on Twitter? Marco Rubio trying to become the evangelical far-right guy for the next election? I don't think that'll work too well for him. Well, we're getting some really decent excursion now to the downside in the treasuries, but I'm noticing that the micros are being a little stingy. Well, okay, they're coming up though. They might push. I think that if an election was held today, that just about anybody would beat Biden, yeah. I tell you what, I thought that after Donald Trump was out of office, that like media manipulation would maybe chill out a little bit. But I would say that if anything, it's gotten worse. And it really, so I give you an example. Oh man, I'm going to be controversial here, but like, I honestly think this is the truth. You heard about this, huge train derailment chemical spill over in, is it Pennsylvania? I forget where it is, but people are saying that this is like one of the worst ecological disasters, like outside. Yeah, sorry, you're right. It's Ohio, outside of Chernobyl, and like because it's toxic gases, lots of people had to be evacuated and so forth. Yeah, you didn't hear about it? Well, if you're on TikTok, you probably hear about it, because on TikTok right now, all of the left is complaining about how it's not on the news. Like, why aren't the media covering this? They think that it's because the company paid the media to not cover the story. Maybe, but here's my take. You don't want to make it a big deal unless you can find a way to make it about Republicans. So did you hear the thing about the Secretary of Transportation, Pete Buttigieg, said that he was investigating the incident for signs of racism? Like, what? A train derails and you're gonna try and blame it on white supremacy? Like, that sounds silly, right? But if you read the coded language, what it really means is, well, I'm looking for a way to blame this on Republicans. That's really what's going on, right? And I guarantee you, you watch. The instant that they can find a way. So part of the problem is that some of the regulations that changed happened under Pete. So they kind of have an issue there, but yeah, they're going to keep digging. I guarantee you, as soon as they find a reason to make it about Donald Trump or about the Republicans, it'll be wall-to-wall constant news coverage. You watch. Because the public is certainly, at least the people on the left, certainly seem interested in it. They just haven't found the narrative that they want to push people towards yet. So the media has done a really good job at kind of, playing shield for Joe Biden. But despite that, Joe Biden's popularity numbers are not very good. I mean, they are really not very good. So just about anybody could, if it was held today, just about anybody could have run against Joe Biden and beat him probably. Like if it was Donald Trump right now, as toxic as Donald Trump is, and I really wish that he would go away, to be honest with you. I think he served his purpose and it's time to step aside. But if it was held today, I think Donald Trump would beat him. And there's polling that suggests that too. None of the right-wing shows covered it? Oh, that doesn't surprise me. So think about it from, if you are Tucker Carlson, well, I think that you will start to see more people cover it today. I bet you that the right wing will cover it today, because they're all going to realize how bad this makes Pete Buttigieg look. So you're going to start seeing them cover it. But outside of that, it's just an ecological disaster. What kind of like political bend can you get? I mean, it's like the Republicans have the same thing, right? They're not interested in it until they can bend it in a way that it makes Joe Biden look bad, right? But it seems to be generating the clicks. Like I'm seeing these news stories like start to get to the top. So like on news websites that show you their top ranked stories by views, right? So you can see that the public does seem to be interested in it, and so eventually they'll have to see the public catch up. Or sorry, eventually you'll see the news catch up, because they want the money. Oh, my camera died, so I'm just going to leave that up. I'll switch over to my basic over here. Found a Python investment research platform, OpenBB. Yeah, the cam died. Let me just turn it down. Well, I guess I should have held. I tell you what, managing the swing trade that I had, that was the worst part of it, was that I bailed on my swing trade up towards the highs, and I should have just held on. And it would be doing amazing. So here's 3.75, which is about as high of a rate as we've had lately. Let's come back over here and take a look at the volume profile chart from the past few days. Oh yeah, that's lower than any of the prices that we've had this week. Yeah, and a breach of all of these key levels too. Parkin saying rates higher for longer. Yeah, I got a fan coming tomorrow that should help with the camera overheating, so hopefully that works. Well, I don't know, guys. 3.73. 20. Oh, we need to switch back to the other screen. Oh, that's right. Parkin is not a voting member anymore. For me, this is a tough call as to whether or not they push lower. They push meaningfully lower today or not. I can certainly see the case for it, but it is really not what I expected at all. I got this one dead. I don't think I've been dead wrong on a an economic number release, like the aftermath of an economic number release, in a long time. Rebalancing back to 13.5. Well, you're getting some buying there. Is that from the dollar? Yeah, once again, it's from the dollar. That could just, I mean, for the dollar, that just looks like a minor pullback, right? Yeah, this guy named Chris in the Discord took a real beating off of that. He had been holding a long ES since like last Friday, so he got hammered really bad. Bounce off the evens in ZN? What do you mean by that? It is kind of making possible reversal kind of patterns, but they're gonna do that a bunch of times to try and get people to buy it, right? And in other words, I have a hard time seeing at this point the flows outright reversing and this all of a sudden going back up to the highs, right? That would be super crazy. Although I suppose would be, what is the word? Beautifully ironic if that's what happened. But no, I think that the flow is probably going to continue to come in short. The question is just like how much more short, right? Because you might get stuck in this range where it's just like really difficult to catch anything now. You know, one thing that I'm noting, by the way, when I look in the 10-year and I look at the drives in cumulative delta that we've had, they all happened in two locations where I would have expected stops to be and so forth, right? So I do think it's the dollar that's driving things, but I think that you had people got stopped out both sides in the 10-year. Oh, you know what really sucked about that trade though? Was that there was a point where I was starting to get the long flows come in again like I wanted, and it died just short of where I was like, okay. What do you think about Bookmap? It's not my platform, but it seems like it's an okay platform. Its DOM is not as good as Jigsaw's DOM, but seems like you can still do what you need to do with it. Okay, Barkin is, I think, arguing hawkishly at the moment. President Biden picked Lael Brainerd, the Federal Reserve's vice chair, to help lead the Council of Economic Advisors. Yeah, that would be a serious demotion. Why would they want her to do that? That's a little weird. Well, so we're right in the middle now at this point between two liquidity holes that had formed earlier. The one that was down here was pretty brief. The one that was up here, it may actually still be a little bit damaged. So I think it might be a little difficult for them to get above 21, but if the volume's there, they can certainly do it. It won't be too much of a drag on them. You know, if it had been completely hilled, then it would be really hard to get through this area, but I had been looking at 3.74. I don't know if I really had a good reason at 3.74 though. I think I just want to get in it and get revenge, you know? Tim Seymour says only 20 basis points left of easing in the federal funds curve this year. Market starting to get religion on the Fed's plan, but does the Fed have one? Oh, so he's saying that these expectations of cuts are maybe disappearing. Are you scalp trading? I mean, I guess that depends on what your definition of a scalp is. Right. Because some people think that a scalp is market making. Some people think that a scalp is defined by how big of a profit and target or a stop and target you're taking. Some people think that a scalp is a small trade based purely on the order flow. Some people, you know, it's all these different things. So it kind of depends on what, right? I don't call it scalping though. Icebergs, both sides, 16.5, 17. They take the bid. They take out the bid to tick down. It's now low liquidity at 16.5. What time frame are you trading? I don't really have one. I suppose most of my trades last about 30 minutes. But now what you're saying is, I think what you're suggesting is, do you have 1 minute or 5 minute or 30-minute charts? Well, I mean, I do have charts over here, right? I've got lots of charts, but I don't really base my trades off of that stuff. Well, the dollar is really chilling out here. I should have done the 3.74. The more that I look at it, the more I realize that that was a really good spot from a tactical perspective. It was just that I was like, well, I think that the flows will probably be mostly shorts. Well, do I still believe that? I am kind of leaning more towards it chops around down here now. Trying out a heat map to maybe hold trades longer. So here's how I would define, like, how long should you try and hold the trade, right? It depends on how long you can predict the flows, right? So if you have a piece of information, so let's just say that the CPI number came out and it was like 0.2 rather. Let's say that the CPI number came in 0.2 higher than the market was expecting. What do you think would happen? Yeah, the market would sell, right? And it would just be like straight down. And not only would it be just like straight down, but they would probably continue selling for several days. So that's a situation where I can predict the order flow for several days. So my trade can last for several days, right? Right. What matters is, can I predict the orders? In situations like this, you can hold them for a long time. And I would recommend that if you catch one that runs, that you try and hold it. If it's that big of a situation. I don't know if today is that big of a situation. So here's the thing here's where it gets interesting, guys, is that okay, so we've had this huge mess after the CPI came out in line. Tomorrow we have retail sales, which could be a real doozy. Like, the chances of that one being like a big beat or a big miss are higher than usual. So that could really, really roil the markets. They pulled back there, but it's still below 3.73. Just trying to figure out how you're trading. Yeah, so Tiawan, the reason you're getting the kind of the responses that you're getting from me is because all of the questions that you were asking me are the kinds of questions that I would ask if I was basing my trading mostly off of technical analysis and I was trying to watch another technical analysis trader, right? But I don't really factor the technical analysis, or not really. I actively avoid factoring in the technical analysis of price into my trading. I read order flow. I try and find things that could predict future orders. You know, like changes in expectations based on economic numbers, for instance, right? Or end of month flows, those sorts of things, right? I look at correlations. So we've been pointing out over and over again here that the dollar seems to be the move in the markets overall so far. And the volatility, right? These are all things that are proven. There are like proven aberrations in behavior of the market in these things, right? Price. I don't see any such proven stylized behaviors of price. And Steffa, welcome. So I ignore the technical analysis of price. If you traded today, you better be in Olympic trader mode physically and mentally. Do you think so? Do you think that I maybe was too nervous on that trade and made bad calls because of that? I think that overall my call was just really wrong, and I took more risk on my call than I should have. But in order to play in this market, that was kind of what you had to do, and it just ended up being wrong. So I don't think I can do any more than that. certainly I'm going to pay attention to the dollar a bit more next time, or like early on. But I don't know. I don't know if there's a piece of information we could use that would help us explain what the dollar was going to do better. You know, you don't trade off price action at all, basically. Yeah, because price action is bullshit. So here's the thing. If you can show me a peer-reviewed study that shows some sort of a stylized behavior, which is to say a tendency, a statistical tendency that tends to be true at a level that is beyond just the margin of error, okay? A consistent statistical behavior, and you can show me on a data set that's 5 years or more, right? Peer-reviewed study, then I would trade off of it. But I've never seen any such thing relating to price action. So let's see here. Brannigan Barrett, this is the kind of inflation point where if you are bullish, you point out the trend is still pointing towards a decline in inflation year over year. If you're bearish, you are shouting sticky inflation and be on consensus expectations. Expect more of this range trading in risk. Yeah. Well, so this is the thing that I think caught me off guard the most was the initial volatility off of that was so insane. Yeah, it was a really insane range, even though the action has pretty much all been range bound. You know, like when you look at the flow. Okay, well, like from the news, so starting from the news, I'd say it's about 20,000 contracts net short. Okay. Past CPIs, it's been 60, 100,000 or more, right? So it's a relatively range bound, and that decline that you saw was only after we reached 112.24, right? And we got those stop outs. So before that, there was hardly a 5,000 net contract difference in the 10-year, right? Let's see here. Oh, okay. That was just, I was gonna say S&P 500 looks really good, but it's just because that's the open high, not the extended session high. The extended session high is all the way up at 4186.50. Ouch. So I was watching that there and thinking, well, we maybe get 3.74 again. And somebody hit that 3.736 with a 20 lot. It's because the market makers are getting better. What does that mean? I don't. See, this is why I have this issue with almost any time that you guys say stuff about market makers. How does the market maker trade? He adjusts his bid and offer based on correlated instruments and the order flow, right? Like it is the perfect situation of something to automate, because the reality is you don't have to do anything, right? Well, it's not that you have to do anything. You don't have to come in and manipulate and do this sort of trick and this sort of a thing to try and you just have to follow whatever your arbitrage strategy is, and that's it. So they don't You know, there's not some sort of tactical maneuver that they're using to screw you all over. They don't have to do that. All they have to do is market make based off of the spreads and arbitrage. That's it. And they'll tend to make money. That's it. Is this exactly the time you should trade like traders are going to trade and not care about interpretations of the news? I don't know if we can say that yet. Right? So like here's the thing. What if the conclusion is that inflation is sticky and that the Federal Reserve is going to keep interest rates higher for longer, and that there's not going to be any interest rate cuts this year or any of this other stuff that the market was trying to price in, right? What should we expect to see? Well, we should expect to see the interest rates go higher, right? We should expect to see the interest rates go higher. So if that is the final conclusion that the market makes, then that's kind of a significant thing for the longer. I mean, that's the sort of a thing where you might look back at February and realize at the end of the year that February was kind of a pivotal turning point for the market that kind of set the tone for the rest of the year. Right? Well, you said the market makers are getting better at their job, and I'm saying no, they're doing it just as well as they've ever done it. And the problem is just that the information that we had wasn't strong enough to overcome the advantage that they have, right? Where did they pull their orders for no apparent reason though? Like, where was there that excessive pulling? How are you seeing that there was excessive pulling? Right? So given the current market liquidity and everything else, you would have to be talking about an area where they moved like 8 ticks and it was only 100 contracts each time. Right? That never happened. What happened instead was there was healthy volume the whole time and market makers taking fills the whole time and just adjusting based on the dollar. And there was never at any point a situation where I thought that the orders were pulling and it didn't match up with the correlations and, you know. Nah, I mean, adjusting your bid based off of correlation with the dollar index is not the same thing as pulling your orders, right? The range was strong enough to justify me saying that they pulled? No, I don't think so. I mean, they definitely had pulled like the first 5 minutes where we created that low and that initial low and that high. That is definitely what happened, right? But you're always going to see that like right after the news. But like all of the action, let's say like 15 minutes and afterwards, I would say that all of the behavior was just like really healthy movement that was largely to do with the correlation with the dollar. Now, maybe they were pulling in the dollar. We can't see any of that stuff. I don't work for a bank, so I can't see that stuff in the dollar. But in the treasuries, that's not what was happening. And the range appears to be due largely to the dollar. So think back on it. Like, think about how many times we've seen icebergs or 2,000 or more traded in areas. Look at what is listed on the volume profile, right? There are 4 areas with more than 40,000 contracts that traded, right? So even though there hasn't been a significant change in cumulative delta, which is to say there is a lot of buyers and there's a lot of sellers, but there's a relatively equal amount of them. Up until they failed 24. When they failed 25, then you got a flood of selling in the 10-year, at least. Now, one could argue that the reason that is, right, is that the action is happening in the 5-year. I didn't see any kind of suspicious stuff in the 5-year either, but you know, I'm not paying as close attention to it. Certainly does seem like the 5-year has kind of been like the kind of the ringleader here. But again, I think the 5-year is just following the dollar. This is all actually really, really very, very interesting because the treasuries are still kind of chilling at the lows. But look, the dollar is almost back to recovering, giving up all of that upside action that they had. Maybe we are going to get the thing where they go completely back the other way. Because we're almost to where I had bailed at, right? I'm still kind of like, you know, if I had gotten 3.74, I don't know if it's gonna go, but I would much rather be in the spot where I have a little bit of excursion and maybe it's gonna go further, you know, rather than sitting here without a position and, you know, wondering, well, I could take it here, but this is maybe like a really awful spot, right? It's much better to have already been in the position and know that, yeah, at least you got the good spot. Right? Because if you got the good spot, then even if the trade doesn't work out, you just scratch it. Oh, there you are, my son. Where you been? And with all that said, the S&P 500 is recovering 4160. You had to step out. What's the reaction so far? So we saw really big excursions on both sides in all markets. And then after a little bit of range bound back and forth, eventually we saw a deep excursion on the sellers in both the treasuries and the equities that appears to be primarily driven by the dollar. And now we are seeing that huge excursion in the dollar almost completely revert, bringing us back to kind of that even area, except for that when we were last at that kind of you know, kind of choppy area, we were ranging in the 27, 28 area, and now the treasuries are ranging in the 19. So even though the dollar's come back, the treasuries are not buying up as much. Oh, that's interesting. I started researching futures this year and have been demo trading ESN and Q and oil. I know nothing about trading bonds until I watched your video, and it is very interesting and I want to learn more. Yeah, so did you watch the micro treasury yield futures specific video? That's cool. I have one about order flow. That's the one that I always like tell people, like, you want to understand what we're doing. That's the one that you should watch the most. The whole video series is like 4 or 5 videos. They actively adjust their polls based on, well, they will pull all of their orders off before the news, right? And then as time goes on, after that, they will their liquidity will return, right? And they're going to continue to, and then they start to market make based off of, you know, all of the things that are a part of their strategies. But one of them is correlations with the dollar in this instance, right? Give me my money, cowards. They're kind of coming back down to the lower end of this range, but like, look, the micros aren't getting above 3.73. To keep watching this, like, I would kind of like to take a trade, but like, I don't know if I can justify selling 3.725. Anyways, but the whole point is that what seems to be the key driver behind the move so far, the dollar appears to be the most significant factor. And how are we identifying that in this instance? Because literally every asset is pivoting at the same time. Literally every asset out there in the market today is pivoting at the same time based on the dollar, right? And the last 30 minutes is the first time that we've seen any kind of divergence from that. And the divergence is merely that the treasuries are not coming back up as much as the dollar. Curious, right? And we can't see all of the stuff in the dollar, but I'm going to bet that you looked over there at the dollar, that there was a lot of activity. Like a lot of flow and a lot of money changed hands over there. Sometimes I see 400 to 500 orders get placed at a price on ES shortly after they disappeared. What's up with that? So with those that like get placed and they get removed really, really quickly. Well, so for starters, I haven't seen that in a long time. Not 500, not 400 to 500. So I have this market depth tape that shows you the amount being stacked. So probably you're seeing more like 200, right? Like this right here. Who knows what that is? You bought the micros to life, everything else is dead. Yeah. I'd like to know, you know, well, there wasn't a ton. Where's the first spot where we come in and we see like big trades? 3.731. Well, okay. Man, it is not cooperating with me. For me to, if I want to take another trade. It's doing like a consolidating triangle to the upside. So even though I see some downside excursion, like I would have difficulty getting 373, definitely not going to get 374. But like, look, it just kind of, the inside bid and offer seem healthy, but it's just like stuck. We'll see if somebody takes out 21. Maybe we have a change if somebody's willing to buy through 21, but at the moment they kind of look like they're not. They're okay with 20. Oh, big spike up in ES. Well, shit, where did I... Oh, I was at 671. seeing more volume go through in the micros. We're right at a key market maker position though. Did they? I missed it. Did they traded through the big order, didn't they? Or did the big order pull? White House is talking about these UFOs and everything. Dollar continues coming back though. Why are they going in tandem? Well, like they're following the dollar, dude. Look at it. Look. Right at where the S&P 500 bottomed is exactly where the dollar shifted. The only reason why I say that it's that they're following the dollar and not like they're all following the S&P 500 is because every market is doing it. When every market is doing it, probably it's the dollar. Yeah, despite that, like, you know, a little bit of excitement up here at 21, the volume and like the volume imbalance in the treasuries is like really died out. So, I don't know, we'll see. Maybe we're getting to the point where things can decouple a little bit. The place where I saw a take that I was like, ouch, because I wanted to get in higher above that was, I think, 3.725. When you say that your trade was a little bit before its time, no, so are you suggesting if the dollar moves back down to lows, maybe I was right and I was just too early? I don't think so. I think that whatever the case is, the situation and what was driving the flows was a lot more complicated than I thought it was. Right. So one could argue that it was a bad time to be taking risk. We could argue that, because you notice that I've done pretty okay outside of the big events, and then on the big events it's like 50-50. And when I say big events, I mean like the really big events, like the CPI and the non-farms. And retail sales tomorrow probably fits in that category too. So do you see it again? So this one is maybe a little bit different because the treasuries came down 4 ticks there. I would say on slightly lighter volume, but it's still pretty decently normal. Now I go back over here and look at the dollar. Well, the dollar is giving signs that maybe it's turning up, but it certainly hasn't turned up as much as the treasuries fell there, right? Yeah, the flu again. Yeah. I would also be a bit more precise. Inline big events. Well, like that. This is the whole thing. Is that I think that I got a little bit too comfortable with some of the news that we've had, where it just goes one way. You know. This is. Whoa. Okay, so that one I think happened because the dollar did shift down there. Curious. So, oh, you guys probably don't hear that sound, do you? So if I come over to my chart over here, you can see these boxes. Those boxes indicate areas where the S&P 500 completely skipped a price because the liquidity was pulled. Okay. So the S&P 500 is in this area between 4165 and 4170, showing signs of liquidity pulling. And when you look at my market maker positioning, kind of strongly suggests that the market makers are all like really short. We're all really short and are getting stopped out and stuff. So that might actually be a good setup for like trying to take advantage of trap traders in ES. We'll see. Okay, well the treasuries did make it back to 837. Blah, what am I like dyslexic or something? 3.73. Oh, you do hear it. Okay. Cool. It's always a little scary. It always kind of startles me when I hear it. Okay. Yeah, the S&P 500 really has been steamrolling them, hasn't it? Like, I should zoom in on this, but like, look, there was the initial selling in the first 5 minutes in the S&P 500, and since then it's been all buying. Although, to me, that kind of suggests that it's the passive flows are being dominant again, right? What's the best remedy for the flu? Well, it's a viral infection, so there's not really a whole lot you can do about it other than to control the symptoms. Unless if it's been less than 24 hours then, and it really is the flu, like somebody else that had it and they were tested positive for flu, then you can go and get the Tamiflu and you'll get over it real fast. Okay, so it seems to me like there is some interest in the treasuries here because we're ticking up and down a lot more now. What the hell? Well, I don't know what to think about that. So we had a little bit of long excursion in the treasuries, but like the micros did not react the way that I would have thought. Okay, Jason Berman, a month ago, 3-month annualized super core inflation, i.e. excluding food, energy, shelter, and used cars, was 1.8%. Now with the new seasonal adjustments and an additional month of data, it is 3.7. Time to update your inflation views. Man, if we were trying to buy micros here, I think that this would be the place to do it. Oh. But again, this is where it's like, okay, so there is that narrative that's out there, but that narrative was something that you could have said last Friday, right? Probably the more interesting thing right now is what's the next move that the S&P 500 makes, because that was a pretty decent recovery there. Now that they've recovered, do they turn back down? It is starting to look like some of the instruments are starting to do their own things and not just being correlated with the dollar, so... Yeah, that bond movement around CPI, I took a really bad trade, got hit pretty hard by it. I took it when the treasuries were up on their highs, right? Like they came up here and it was like really crazy up on the highs, and then they came like super far back. I said, oh, okay, they're gonna range here a little bit, and I buy it, and then they're gonna go to the new highs, and that's not what happened. They turned down, and then I took a pretty big chunk of that downside action. It really hurt. Yeah, no move. Lol. What? I don't know if they're quite ready to do it yet. So the problem that we have now, yeah, party is over. The problem that we have now is that we might not get the next significant move until the stream is over. So... You caught one tick of the UB just before the bond market opened on that down. That's weird. It was one contract, but it was $50. So I don't know. I'm kind of oh, that's interesting. I kind of feel like that we got most of the long side exposure, you know? Because the treasuries are starting to sell off even though the dollar's not really doing anything. Right? Yeah, and you can see the micros kind of jumping at the bit a little bit. Oh, really? I don't think that the timing is right tactically, but... Yeah, see a bunch of retail traders traded in that area and they're getting buried now. At what time was the most volume? I don't have a chart open with just straight volume on it in the S to really show you. Icebergs at 15 half and 15. So like I said, the volume is starting to be more oh geez, okay, they're moved, good deal. The treasuries are starting to move on their own. Without the dollar. That's so there appears to be some liquidity on the buy side, and the sellers are just smashing right into them, man. I think I need to be a little bit wary. Like they may just have a really difficult time getting below 13, but this is as good of an opportunity as you're going to get with that kind of volume. Oh, it looks like the sellers aren't completely throwing in the towel. Or sorry, it looks like the buyers aren't throwing in the towel. So what did I say there? I don't know. Anyways. Okay. That's interesting. Where was those clicks I just heard? Somebody put a bid at 12 and then pulled it. That was kind of one of those ones that somebody was asking about earlier, right? And it's like, some of those you just can't know, man. Some of the stuff that you see in the book, it really is just noise and you just kind of have to ignore. Wait, looking to add a long-dated call and PLTR? What? I don't understand why you would come in and tell me about Palantir, to be honest. Unless you're just trying to convince other people to buy into it. That's not right. Come on, let's try this one. Oh, okay. But what if the overall S&P 500 like turns down and just absolutely pukes within the next week, right? You're gonna get destroyed in Palantir because of its high beta. Pull everything, obviously. I mean, I guess if it's an options trade, you think that the risk reward is in your favor. I don't know. This I feel like this report makes it I'm leaning towards that rates go a little bit higher. Maybe rates continue their march towards 4%, and the S&P 500 starts to struggle a bit here. That's what I'm leaning towards right now. But this piece of news has been confusing enough that you know, I think that the next few days become a little more uncertain. This is gonna really change tomorrow. Like if retail sells tomorrow, let's see here. What are they expecting? So core retail sales month over month, they're expecting 0.9%, and the previous month that we got negative 1.1. Okay, so if we got a number that was, let's say that we either got 2%, which would be a lot, or we got a negative 1.1 again, right? That would like really shift the market and could maybe completely cancel out everything that happens today. I don't know, right? So, and then if it does do that, it's still kind of like, okay, but like, what's the next step? Doesn't really, you know what I mean? Like, I think it becomes more and more difficult to predict the future orders unless the trade is that the Federal Reserve is going to keep the interest rates where they are for a significant period of time. And when I say significant, I mean like well past 2024, right? And the market is kind of leaning that way. So look, S&P 500 turning down again, and now we're starting to see the dollar move. And the move in the Treasury has just been like a slow and steady train rolling down the hill. They haven't breached these lows, so like I said, they might have some difficulty getting below 12, but let's see. Because given the situation, you could easily see a ton of volume puke out here. Well, some iceberging at 41.35 and yes. What is Get Yarn? Oh, like showing a movie clip. It's weird. I've never seen that before, but it looks like a meme website where you share videos. A lot of people have hyped it up in the past on Wall Street Bets and such, but this is the first time that their financials look good. Yeah, and like they're the analytics company, right? Yeah, they specialize in big data analytics. My issue with Palantir has always been that I think the hype that is around it is based more on some of the people that have invested in it rather than an understanding of the actual business itself, right? And I have a real hard time investing in those areas because I understand that technology stuff really, really well, but most people don't. And so all of the marketing and everything that they say about what's going on in their business and so forth is geared towards this group of people that don't really know what they do. And so I can't really get information about what kind of analytics they're doing and whether or not I think that it's really a good buy or not, you know? And so, like I said, I don't think that these people are investing on it because they know that data analytics is a high growth area and that the particular things that they're going to do, they're only going to have more customers and all this sort of thing. Nah, they're invested in it because like Warren Buffett is in it, right? Or whoever. Maybe it's not Warren Buffett. Steve Cohen, Peter Thiel, they're all in it. That's why everybody's all enamored by it. We're still kind of just chilling here at 12.5, waiting to see if they are bust through the liquidity that is likely to be there below 12. I don't have a good grasp on what their technology is on it. And well, yeah, that's it's like again, it's because they aren't really telling anybody, right? So like one of the a good example is like a competitor in that space is Datadog and Sumo Logic, right? So I can now Datadog is the same thing. The reason that everybody likes Datadog is because who's invested in it, right? And they ignore Sumo Logic because there's not anybody big invested in it. But having tried both products, I think Sumo Logic is way better of a product than Datadog. I think that Datadog is super overpriced for what you get, you know? And the technology and the things that you can do in Sumo Logic are way more interesting to me, right? So that's why I own Sumo Logic. But that's because like I use their product, I understand really, really well what it is that they're doing, and they're talking about it, and they, you know, and for a lot of investors, they talk about it, and you know, it's data analytics. You know, I'm sure there are some people that own Sumo Logic and they're like, oh yeah, it's data analytics. Okay, so they took out 12 with 1,700 contracts. Now they're biting into 11.5. Like I said, because of how long it's been, there is likely to be more liquidity than we had in this area below 12. But it's been kind of a slow and steady decline, steamroller sort of a thing. So I don't know if that's too big of a factor here. Only that we should understand that, like it's doing right now, you might go across this price a couple of times before they eventually take it lower. Like it's not going to be like a stop run sort of a thing. And not until they breach like 10, if they get that far. We'll see. The 30-year though looks awfully heavy, so Oh yeah, man, that the 30-year really looks heavy. I'm trading some volume into 127 even now. Oh, is that because? Oh my gosh, you know what? I wish I had realized this earlier. So if the trade is interest rates go higher and we have higher for longer, then what we should see is we should see the long end of the curve rates come back up a lot faster. So really probably the right trade after all of this was to take a steepener. Well, you would have had to have taken it like when we were first at these lows, not initially after the move. Remember, we went down and then we came back up and we went down a second time. Then you could have taken the steepener, and that would have been maybe. I mean, we haven't steepened too much since then, but then maybe that's a good trade on a steepener. I wish I had thought about that like 2 hours ago. Also, we're getting some stacks and like liquidity is increasing in here, so it's kind of starting to look like somebody big might be getting involved in the market here. I'm really, if we get like a strong like let's say that by the end of tomorrow we end up with the knob spread steeper than today, then I'm not going to take it as a trade, but let's just note that seems like a good spread trade setup to me. What function do you use in NinjaTrader to see the order volumes? You have to be a little bit more specific than that. Okay, so there, by the way, was the lows. And we are starting to see some spurts of volume come out in the 10-year. Yeah. Ooh. So, in NinjaTrader, there is a method called on market data, which will trigger anytime that volume comes through, right? And the way that most order flow indicators work is they look at what the current bid / ask is, best bid ask at that exact moment, and compare the price that the market data just came through to determine whether that order was a buy or a sell. That's the way that most order flow works. That box just to the right of your chart. Which chart? The one at the top? Are you talking about my depth of markets? So all of these kind of orange, red, and blue times and sales windows are from Jigsaw Day Trader and aren't a part of NinjaTrader. Ah, okay, cool. That did answer the question. Sometimes it's hard to figure out what you guys are talking about, but you did a good job, Dummy. I thought you were somebody else because there's another Tommy that's in here more often, but you must be newer. Okay, so what we just saw there was the 10-year breached the lows. There was a little bit of like stop outs and so forth in the 10-year, but not too dramatic. And then the 5-year came down to its lows and they've bounced a little bit. We did see, by the way, on that latest move, the dollar start to move. But just note that in that time the Treasury's definitely led the move in the dollar. Oh boy, and that was a new low in the S&P 500 just now as well. So it's still super interesting. This is, it's usually not this interesting at 10:45. But this is looking like a battle that could go on all day. All that said, though, it is a pretty good bounce. This was such a slow-moving creeper that one does have to wonder how much sell-side liquidity there actually is going to be back if we try and retrace that now. Sure, well, there's definitely not. At least that was a good downtick. I was going to say, it seems like you'd be more concerned about the bid-side liquidity now all the way down through here to the bottom. Well, there's some fight there. There was selling there, but somebody bought through it. Okay, now we get Fed's Logan. Is he? I'm not sure. Who is he? Due to participate in a moderated discussion event hosted by Prairie View A&M University in Texas. Audience questions expected. He is the Federal Reserve Bank of Dallas president, Lori Logan. Oh, so it's a lady. I need to memorize the names of all. That's what I'm going to do. That's going to be my next study thing for this week, is to memorize the names of all of the Federal Reserve branches and their presidents. I don't know. There's been some aggressive ticks in here now, but so far they seem to be handling it. The liquidity, that is, that the liquidity seems to be okay so far. The dollar is still on the move, though. This is for the dollar. This is like a 60-cent range in the dollar swings. That's pretty excessive for the dollar, man. So I'm kind of in that mode where I'm noticing every little thing about the markets, and I'm just making all these connections. So don't take it that like everything I say is like super significant or anything. But here's another thing I'm noticing that I think is interesting, and this one I think I want to keep an eye on. So gold pretty much did the same thing as the treasuries, right? Downside at first, up, and then big down, and now a big down. Now on this second big down, the treasuries made new lows. The gold has not. And when gold came up, there was a lot higher. So it seems to me like there's a little bit more demand in gold than in some of the other correlated assets. So we may be seeing a shift in gold where there's maybe I mean, when the Federal Reserve is like super aggressively raising rates and everything, it's been really bad for gold. But maybe in a world where interest rates are staying the same, but inflation is still sticky, maybe then gold ends up being a better play. We'll see. But there's some hints of that, at least in today's action. Well, that was a big sell side iceberg at 11, or a big iceberg offer at 41, at 11 with 4,000 or more contracts going through so far, and maybe some iceberging on the bid as well. And they hit the bid. I should work on some of my terminology here for you so that you guys know what I'm saying when I'm describing the DOM here. They cleared the bid. Cleared the bid, and now back and forth at 10.5. Oh, and they cleared 11 too. But that time they cleared 11, there wasn't a lot of volume with it. So that iceberg, I guess, was done. I don't know. Yeah, because they seem to be testing the upside, and they're like, oh yeah, it looks like the seller's not there now. Well, there's my bell. So I was able to undo some of the damage. Probably could have gotten a much better position on this trade. Because when I first started thinking about it, it was like down at in the 35 is probably where I would have liked to have gotten it. I'm not going to say smash the bid. I mean, because what I'm trying to point out is that they took out the orders and it ticked down, as opposed to it just ticking down with the orders pulling or something like that, right? And like strong offers following it up, right? So like right there at 10.5, they ticked down. They had to take 1350 contracts to do it, but then the offer that they put on top of it was pretty solid. But the spreads are maybe doing some weird things. So the 5-year is like right there at the lows again now. So maybe the 5-year reaches the lows and we get that kind of further run. Could happen. I don't know if it's going to happen before I have to go, though. Looks like iceberg on the bid again. Uptick. All right, guys. Well, I'll keep an eye on this a little bit longer, but it's being kind of back and forthy here. So I don't think I should stick around too long. I got to get back to work. So I will see you guys tomorrow. Remember, we've got retail sales data, which is almost as important as this CPI data. So I'll see you then. In the meantime, stay excellent, team.